Now, for the benefit, go to the Excel, go to the normal thing. No, wait, go to the plain sheet. Now, excuse me, there is one question that I have got from, I don't know your name, sir. Ashok, yeah, Ashok. He says that what is this paid up capital? Paid up capital, it gets added. Please note, when we talk about capital, equity capital, I am talking about specifically about equity capital. First we start with what is called as authorized capital. Now what is this authorized capital? If you look at, for the purpose, you actually, if you have that yellow manual out there, there is a Maruti Udyog's balance sheet there. If you can look at it also, you will know about it. Don't worry, you can also do it later. What is this authorized capital? Authorized capital is the amount of money that the company can raise as equity in its lifetime. I repeat, authorized capital is the amount of money that the company can raise in its lifetime. It can say, I will have 10 million shares at $10 each, whatever is the value you can write, that is value will be 100 million. That is what the company has decided. The company has decided that I will raise I can raise in my lifetime 10 million shares at 10 rupees each. Now, can it change? Well, it can, but it cannot change every year, it once in a blue moon, so let us not worry about it. Now, the company decides to go public. The company says, out of these 10 million shares, I am issuing 2 million shares to the public at $10 each. That is what we call it as your 20 million is the value. That is what is issued to the public. I announce, as of now, I want to issue 2 million shares to the public. You can subscribe, you pay and subscribe. Once you pay and subscribe part of it, I receive applications for, let us say, out of 2 million shares, I have received applications for 1.99 million shares. I have received applications for 1.99 million shares. I have issued 2. That 1.99 million shares, what I have issued, what I have received applications, that will what we call it as subscribed capital. People have subscribed to it. And I do the financial transactions, that is all of them would have paid the money. I basically try to encash it. When I encash it, some things get bounced back, etc. I am receiving money only for 1.98 million shares. I am receiving money only for 1.98 million shares, and that 1.98 million shares is what is called as the paid up share capital, and paid up share capital is what we are worried about, not anything else. That share capital, go to the Excel sheet, sir. That share capital, what I have shown out here is basically the paid up share capital, the paid, that is what is valid. The fellow has subscribed, not paid, I do not care. There are various ways of dealing with it, let us not even worry about it, for feature and everything. The fellow, I have the other 8 million shares which is still authorized, I have not issued, I will show it in the financial statement, but I am not worried, that is not the capital which it's collected. After 5 years, I decide to raise further capital, I will issue 5 million shares to the public at that point of time. Then I will collect money. So what happens at that point of time, what is the share capital? 5 plus 1, assume that the entire 5 million is fully paid up. What is the total share capital value there? 5 million plus 1.98, so 6.98 will be the paid up share capital. With you, sir?
So, but in this case, this 1 crore 20 lakh is the authorized capital as well.
In this, I have not shown the authorized capital at all. In this case, I have not given, no, in this case, no, it is not, it might be, it may not be. I have not indicated to you what is authorized, I have not indicated to you what is subscribed, I have not indicated what is issued, I have indicated only what is paid up, because it is only 2 partners, so that is all, in a public limited company. And what you are worried about is, what you will see is what is the paid up capital. Am I with you on this? it's anywhere if you are denominating it for as equity. Moment you are denominating your share capital into equity, all this come into force. It might be closely held also. We all can start a company, right? It may be closely held. It may not even go and list it. Yes, Pratishtha. That the board takes care of it, the company takes care of it based on their plan they envisage. Can it be revised? Yes, it can be revised, but not doesn't happen every year. Happens once in a blue moon. Right? Now we go to, yeah.
Can the authorized capital be added further?
Yeah, that's what I said. It can be revised. It's not every day, but once in a blue moon. You can revise it. That is, you have to pass a special resolution, you have to amend the articles, you have to amend the memorandum. I mean, that's a laborious process.
There is some MCA fee for that.
Huh?
Why is that?
Where?
There is some MCA fee for adding into the authorized capital.
That is basically MCFE. I'm not very. Government charge, yeah. Charges are always there. That is, every time you have to amend, you have to get it vetted by the registrar of companies. I mean, that's a laborious process. I'm not even getting into the legal aspects of it. Let's keep that aside. Now, yeah.
So will you be covering how a company gets listed and
Not here, not as part of this course. No. If need be, I can do an informal chat, but not as part of this course. Now, let's get to Smoky Valley Cafe. Please read the case very quickly. Lone Pine case, sorry, that is used to be in our textbook called Smoky Valley. Lone Pine Cafe, page number 48. Open this and give me. Quickly, please refer to the book, textbook that is given, and please refer to the case, what we call it as in this particular case. Earlier it used to be called Smoky Valley Cafe, in this case Lone Pine Cafe, the Lone Pine Cafe A. Please refer to the case and then we will be solving that case. I had requested you guys to read it and come to the class. You have read. So fine, I assume that you have read. Because somebody is searching for the page number today, that is why. Now, please carry the textbook, right? That is required also. Now, in this case, what does it talk about? It talks about two aspects. There is somebody, three of them got together, started a cafe, and then they operated for a couple of months, and at the end of a couple of months they had to wind it up and they restarted, etc. Let us not worry about the story behind it. Now, what they say, I want to know what is the position of the assets and liabilities as on the day you have opened the cafe, as well as on the day you are basically winding up that particular cafe out there. Now, let us worry about what happens to this cafe on the day you are starting the cafe, that is what they call it as 31st of March 2006, am I right? Or okay, because I have a different textbook, I think same textbook but a different version, that is international edition, that is the reason. No problem, let us look at the date what you guys have. Let us look at the balance sheet. Thank you. I am not going to use Excel, I am just going to use the basic thing. L plus C is liability plus capital, A is asset out there. Should it be left and right, right and left, whichever way you write it, I do not have a problem. March 31st 2010, the partnership had been organized to operate Lone Pine Cafe, was dissolved under the circumstances, etc. Where is the, yeah. The partnership was formed by Mr. and Mrs. Henry and Mrs. Sanders, who had become acquainted while working in Portland, Oregon. On November 1st 2009, each of the partners contributed 16,000 in cash to the partnership and to share the profits proportionally. So what is the first aspect that happens? In this particular case, the three partners capital will basically be $48,000 out there, and I have my cash which has also been accumulated at $48,000 out there. In this case, equity, there is no, it is not as equity, right? It is a paid up capital, accepted. It is a capital they have contributed. Paid up capital comes in only when we talk about equity, the term paid up capital. Otherwise, it is capital, that is the capital they have contributed. I go on further and read it. On the day the partnership was signed, a 1-year lease for Lone Pine Cafe located at a nearby recreational area, the monthly rent of the cafe was $1,500. What happens? Huh? What happens? Nothing? I am asking you. You don't have to worry about it now because you have signed an agreement, right? We will worry about it later. The partners borrowed 21,000 from a local bank plus used 35,000 from their partnership. So what happens? If they use 35,000 from your partnership, your cash balance, which was 48,000, now becomes 13,000. What have you used? We will come to that. Cash balance has come down to 13,000 and you have borrowed how much? Borrowing, 1 second sir. Borrowing is 21,000. I hope you are following what am I writing, right? I am also repeating, it is a simple thing. Now 35 plus 21, whatever is 35 plus 45, 60, 45, 55, 56,000. What have you bought? They have basically listed out there. Of this amount, 53,200 was for equipment. That is basically what is called as your asset out there, 53,200. Sorry. 2,800 for food and beverage, your current asset. Partnership paid 1428 for local operating license out there. Local operating license. Sorry. Pardon me? As of November 1st, what is the license? You have paid, your cash has gone down. As, is it an expense for you? 1 second sir, 1 second, I will come to you. Yeah. You have paid out, but what happens in this particular case, since you have read the complete case, at the end of 3 months, the KFI winds up, the license is still valid? Maybe whatever, 3 months over, 9 months it is still valid, so what do you do with the license? When you are selling it, what is it? Can you sell an expenditure? When you say can you sell an expenditure, as of today it is unutilized. I have not utilized the benefit of that license. The license is valid for 1 year. I have not utilized. As of November 1st, opening day, it is still valid for 1 year. Same evening, instead of the story which happened 3 months later, it could have happened on the first day itself. If it had happened on the first day itself, then what would happen? You would have closed the store and the license would have been sold to somebody else also. So license is valid. As of today, it is an asset. Am I with you, sir? Now, beyond this, they paid about 1400 for the new cash register. Huh? Then what else am I missing out? Which one? What is it? That's what I said. No, cash 13,000. हाँ सबको ऐड कर दिया. Everything is added. Cash has to be? When I paying? Out of what are you paying? See, you have borrowed 35,000. You have utilized, borrowed 21,000. Utilized your cash of 35,000. So total all this 53,200, 1428, 2,800, cash register 1,400, and then how much is it? Cash will be more? That's what I am asking you. Let me read it. The partners borrowed 21,000 from a local bank and used this plus 35,000 of partnership funds to buy out the previous operator of the cafe. That is what I have added 21,000. 1 second, we will go step by step on that. Now, let us not, as of now, what happened? You borrowed 21,000. Initially, what was your capital? Your capital was 48. You have got 21,000 more. 48 plus 21, 69,000, that is what they will say. So, let us keep it at 69,000 as of now. In that 69,000 you have bought equipment for 53,200, it gets reduced. Further you have bought what is called as 2,800 of food and beverage on hand when you have bought the cafe from somebody. The partnership paid for a local license 1428, that is these two 53,200 plus 2,800 is how much? 56,000. So, basically these two is what you have got when you purchase the cafe. So, 69,000 minus that 56, then what happens? Basically it becomes 13,000. Then you have bought, in the sense if you have to further do this, let us at this stage, these are the things what you have bought. Now it is okay? Now it is clear? Now what have you done? You have gone ahead and bought what is called as a license for 1428. When I have gone ahead and bought a license for 1428, now what happens to my cash balance out here? 13,000 minus 1428, can one of you tell me that? 13,000 minus 1428, 11,772. Now further you have gone ahead and bought a cash register. Cash register is basically the machine which you basically use out there. Now cash register, that is about 1400. When you have bought ahead and bought that, then what happens to the cash out there, cash balance? 10, 172. With you on this. Now I have gone step by step, that is perfectly fine. Right, that is all what has happened. So, as of today, as of the opening balance sheet, this 48 plus 21 is basically what is called as 69,000. In this part of it, you totally add all this, it basically be 69,000 out there. All your assets out there. That is where you have utilized your assets and liabilities. Now it says the cash was remitted in the checking account. Checking account is nothing but you are remitting in a bank account. Instead of cash, you erase it and write it as bank account. That's all. Yes, sir. Yes, Anshuman. Anshuman, right? Yeah, that is what I have written. Last one, cash register. Of course, my writing is very poor. 1400. On the day you open, when you start the business, beginning, not at the end of the day. On first of November, when you start the business. Once you have all this, then you go and do the ribbon cutting and then open the cafe. Before you do the ribbon cutting. Right, just for you to follow. Am I with you on this? Now I am going to give you 5 minutes, do the closing balance sheet. I am going to take 5 minutes extra. You have a 20-minute break, right? I am going to do 5 minutes extra today. Do we move ahead? 5 minutes, we move ahead. Okay? You can follow what we do, and then there will be confusions, there will be doubts, don't worry about it. As we go along, we will try and solve it. Now I am just skipping the couple of paragraphs of the story because I don't want to talk about the story out here. I am just moving to the last but one paragraph. In response to Mr. Simpson's questions, catch that, last but one paragraph. In response to Mr. Simpson's questions, last but one paragraph. Ms. Antonio said that the cash register had contained 311 and that the checking account balance was 1030. on the day the cafe was wound up, the cash register contained $311 in cash and checking account contained 1030. That means what is the cash that was there out here? The cash that was there out here, which was 1700 at the beginning, the cash that you owned was only 311, and then what is called as your account balance was basically what we call it, your account balance was to the tune of about 1030. Right, we are preparing the closing balance sheet. I am just taking the opening and we are preparing what you own on that day, that is all. Now there is a question, I know what is the question. The cash register was stolen, that is the question. We will come to that, I am expecting that question, do not worry, we will come to that, Ski instructors who were permitted to charge their meals had run up at accounts totaling about 870. The accounts are subsequently paid on fully later, let us not worry about it. As on that day, they had run up an account of $870. That means what is it? It is basically receivable for you, that is receivable for you, what you call it as ski instructors account, 871. 870? Okay, yeah, 870. With you on this? So far, that is an asset for you. The rest of the things we will worry about it one by one as we go along. The Lone Pine Cafe owed the suppliers amount totaling 1583 on that day. What is it? It is a liability. Agreed so far? Yes, Rajesh. Sorry. Pune? No, 10:40. I told them 5 minutes extra I am going to do, Sunil. Thank you. Now, Mr. Simpson estimated that depreciation on the asset amounted to 2445. What is the asset value? The cafe equipment was 53,200. Now, what is the value as of today? 53,200 minus 2445. So, can you tell me one of you tell me what is the value? 50? 5755. Huh? Correct? Okay, fine. Thank you. So far so good. Further, food and beverages were estimated to be worth about 2,430. That is on that day what is there in stock with you. That is what is there in stock with you. It was about 2,800 earlier, now it is 2,430. So far we have touched equipment, we have touched food and beverage, we have touched cash, we have touched account out there. We have not touched the cash register and as well as the license so far. We have not touched these two aspects, we will worry about these two aspects also. During the period of its operation, the partners drew salaries upon agreed upon amounts. Will it affect your balance sheet? Why? Cash will reduce obviously, but after reduction of that cash is what? Is the cash what you own, that is what you have written. Sir, partners' salaries are not known. You do not need to know, you would have already paid means that would have gone out of that. What is the cash in the and in the whatever in your hand, that is what you are worried about and that is your asset, that is all. The clothing that Mr. Antonio left behind was estimated to be $750. What do we do with that? Asset? Huh? How many of you say asset? But what? But what? As far as the entity is concerned, does the entity own the clothing? No. Then why are we worried about it? Somebody can say I can use that to recover the cost of the cash register. That is a different angle, sir. That is, we will not even worry about all that. He may come back, he may not come back. I will use it, I will sell it, I will wear it. Whatever you want you do. But does the entity own it? No, entity does not own it, so it will not appear anywhere. What are we worried about? What the entity owns, what the entity owes as on that day, that is all. The partnership had repaid 2100 of the bank loan. Now 2100 of the bank loan that you had repaid, that means what is your bank loan left out there? 18900. Now cash should reduce, somebody will say yes, cash should have reduced, only after reduction of the cash is what you have $311 with you, that is all, that has got reduced already. Further, Simpson explained that in the order of the account, the partnership, etc., 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 out there. Now cash register I have kept it the same, and as well as cash also I have sort of retained at 311. His argument is cash register is stolen, cash is also stolen along with that. Perfectly fine, you lodge a police complaint, maybe you will recover it, maybe you go to the court and who owns that register? The day, supposing next day you are able to find the register in the gutter next to it along without the cash, who owns the register? Register is owned by you. So as of today it is an asset for the business unless you decide to write off. As of today you have not written off that asset, it is still owned by you because it is stolen, agreed, lodge a police complaint. Supposing I have an automobile, if my automobile gets stolen, what do? Automobile is still registered on my name. If something happens, if somebody plants a bomb and it bursts somewhere, who will be caught? Me, not the fellow who has stolen. I can lodge a police complaint, but I will have to be running between the court and the police station all the time because you own that. So what you own is what we record out here. Stolen, don't worry about it. Unless, for example, food and beverage to the extent of ₹1,000 is destroyed or has got spoiled, then what happens? That ₹1,000 was spoiled will be an expenditure for you. So what will be the food that is valid out there, remaining, usable? What you own is what is important. Now that is all what is there in this balance sheet. Now if you look at the balance sheet, does it balance? No, it does not. Why? Huh? 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 Where we have not dealt about any expenditure at all. Usha, 1 minute. Yeah. No, we have not looked at it. That is all, that would have all been paid. As of now, what you own, that is all. License, agreed. License part of it, what is the utilization of the license? The license was for 1 year. Now, what is how many months have passed? 5 months have passed. The license is valid only for 7 months. So what is the 1428 divided by 12 into 7? What is the validity of the license? 8? That is the validity of the license. Accepted, sir. Perfectly fine. Now think through this. Think through this, why the balance sheet is not balancing. No so simple. This is the sources of fund. This is the utilization of the fund. Now what has happened? There is a inefficient utilization of the source of fund. So what is the resultant figure? Resultant figure is basically the loss that is to be borne by the equity providers. Whatever is the difference that you reduce it from the capital loss, then your balance sheet gets taken care of. We will revisit it, no problem. We will revisit it next class. But before that, textbook chapter 2, I have given the exercise numbers 2.1, 2.2, 2.3, whatever it is. Please try and attempt solving all that. Now, what you will have to attempt solving all the exercises in chapter 2 and chapter 3 also, if I am not wrong, as well as solve the case Maynard Company A, and then walk into the class next week. Now go back and think through it. I am very sure 90% of you would still be confused. Why is the balance? How is it a loss? We have not accounted for expenditure, etc. What did we do? We accounted for what you own and what you owe as of that day. What you own, the value of what you own is less than the value of what you owe plus equity. That means what? You have made an inefficient utilization. Remember the monkey and toy example which I used in the first class. I borrow 100 rupees, I make a toy, 120 rupees value, perfectly fine. I made efficient utilization, that 20 rupees gets flowed back to the profit. Borrowed 100, made a toy, became a monkey, bought it for 80 rupees, then what happens? The 20 rupees is to be borne by the shareholder or the capital provider in that case. Okay, I am sorry I extended by 10 minutes, that is because I start also a few minutes late, people walk in. Try to be on time at 9 o'clock, right? Okay, thank you.